Thank you all for coming to the sunrise service. Appreciate you showing up early for the kickoff event for Montgomery Summit 2017. We have an amazing panel today. I'm David Hernand. I'm a partner at the global law firm Paul Hastings, resident here in Los Angeles, and have focused for the last 25 years on M&A and media, entertainment, and technology. Trying to figure out what I'm going to do for the next 25 years, but
So am I.
yeah. And today we're going to talk about the outlook for M&A in 2017, or as I like to call it, M&A in the Trump era. And we have three individuals, panelists, to present on this topic who really represent a collective wealth of knowledge. And I'm going to have Ken, Muddu, and Emily introduce themselves. I'd love for you to just present a little bit about your background and maybe give just a brief pitch or overview of your company. We'll try and keep this short, but what you all do is so interesting. I think it'd be great for everyone to start with that. So Ken, you want to kick it off?
Yes. I'm CFO of Yahoo, which I think everyone knows who Yahoo is and what we're up to, so I'm not going to go through a long explanation of that and probably not try to answer any questions on that either. But I have been in technology finance now since 40 years, CFO of a number of companies for 30 years, and on probably, if I add it all up, probably on at least 30 boards. I'm on 3 publics as we speak. I'm spending a little bit more time as I think about what I do next is some of the nonprofits that I've been getting involved in and some of the things that I can do that I feel passionate about. But one of the things I've learned is, and I say this always, I decided to come out, you can probably hear my accent a little bit, but I came out from the greater Boston area and decided that Silicon Valley back in the 70s was the place to be, and so I was able to combine a technology and finance background and basically go into finance in a number of technology companies and taken a number of companies public, been on a number of boards that have gone public, and I actually like what I do, and that's why I tell people figure out what you do, and if you do it pretty well, keep on doing it. And so that's what I will continue to do, and as I said, we'll see how this, as we close out this situation, I'll see what else keeps me going. But I think the wealth of not only Silicon Valley, but actually now down here in LA and other areas is in terms of companies being started and created. Obviously, just recently, Snap is created out here in Venice and just went public. And so there's a lot going on, and it's a great time to be alive.
Thank you. Muddu?
Hi, my name is Muddu Sudhakar. I'm the Senior VP GM at ServiceNow. ServiceNow is a largest billion-dollar company that's growing the fastest in the enterprise space. We are in the business of from IT operations, cloud, HR, from the IT service management throughout the whole gamut of enterprise. I have been both played a role in big companies and small companies. I've done 5 startups. I'm 5 and 0. Never lost money for investors so far. And I'm the product CEO for the companies, or I play a Senior VP GM role at the large companies. So that's what I do. And I went to school at UCLA.
Good morning. Thanks so much. My name is Emily Keeton. I'm the head of M&A for IAC in New York, so it's great to be in California today. We are a holding company that has built and spun out a number of businesses over the years, including Ticketmaster, Expedia, most recently Match. We also own Vimeo, which is a SaaS business for film creators, and HomeAdvisor, which is a marketplace for service providers and homeowners to find professionals to help repair their home. I've spent the last 25 years working in investment banking and corporate development, primarily focused around media and digital media. So it's looking forward to the conversation today.
Fantastic. Well, as we sort of think back to 2016, from an M&A perspective, it was a good year. It was down a little bit from 2015, which I think was a record year, certainly a record year since the recession. And big corporates had a lot of cash on their balance sheets. Private equity firms were investing more. Overall, a very good year. And the question is, what does that mean for 2017. Obviously, the big change is, at least here at home in the U.S., is we have a different administration. And as we face into 2017, we'd love to get your thoughts generally as to what kind of M&A environment you think we now have and look at for the rest of the year. So, Emily, you want to
Sure.
lead off?
I think it's going to be a very busy year. Pretty much every company we're talking to right now is either trying to raise money or engage in strategic conversations. I think maybe some of that is just, if you look at where the market is today, an IPO is a legitimate option to selling your company. So, I feel like it's going to be very strong this year. And some of that's just based on anecdotal evidence of the conversations we're having, and just even the level of activity we have within my team and our company.
And do you get the sense that that the companies you're talking to, either you as a company or the companies that you're speaking to, are people bothered by the craziness going on in Washington, or is that just white noise?
I mean, it's definitely a concern. A lot of the questions around what's going to happen with taxes, what's going to happen with trade, what's going to happen with foreign workers, nobody really knows. But I think in general the market's pricing in. It's sort of priced to perfection right now. It's pricing in that the tax reform is going to go through. It's pricing in the lack of that we will not get into a trade war. So I'm sure there's definitely concern around that. But the companies that we talk to that are in the growth stage, particularly on the SaaS side, are just seeing such acceleration. And some of these are just secular trends around how people work, around the types of services they use, et cetera. So the companies are doing very well.
So, Muddu, I know we were talking earlier about the sort of impact on foreign workers and sort of that impact on M&A. You want to share some of those views?
Sure. I think back to your first question, and I'll connect to this one. See, the way which I see the world right now is there's industries going through 2 or 3 major, what I call computing trends that are important. Cloud and SaaS is the biggest trend that's going on, and that is really destroying a lot of businesses. So a lot of people will lose out, some people are going to win. Same thing with this whole AI and machine learning. I think a lot of businesses are going to be out of business because of that. That's also causing a lot of jobs to be eliminated at some shape and the form, because most industries are automating their jobs, right? But at the same time, it's like industrial revolution. Even though jobs are lost, the jobs are moving up the ladder, right? So given that, and an M&A environment for buying is a lot of appetite right now, because you can't even hire people today with the new policies on immigration. It's better to buy companies than trying to grow organically. I mean, you can't hire hard enough, fast enough people. Now, other thing that's going on is in this age of this cloud and machine learning, the automation is going on so much. Unless the companies are really know how to code, nobody wants to buy an MBA company or a CFO company. Nothing against Ken, but right now everybody needs to go to school to write computer science. If you're not a programmer, no company is going to value you at all. So hiring these salespeople, business people, marketing has zero value. Like when we look at it, I mean, I got acquired 5 times. I've bought companies in the past. Right now, in last 40 years of computing, if you don't know software, people in this room are people you get to let them to learn software. If you don't know software and coding, you're not going to survive in the next 20 years. It's becoming such more very critical. So throw away your MBA degrees, get back to computer science.
If I could just add to that, it's interesting. I was, I don't know what question you want to ask me, but I was with the dean of the Cornell Engineering last night having dinner with him, and he asked me if all the activity in computer science is a bubble, and I said no. He wanted my opinion. I said no. Everything I see is that's where everything is happening today, and I think for at least the next 10 years, and after that, who knows? But I think it's going to continue very, very strong, and that's where people should go. I mean, if you look at many of the very, very good schools, the #1 class in arts and science, even in arts and science, is CS 101. I have a son that graduated from Cornell also in economics. I mostly had an incentive to force him to take computer science because it is a mainstream. It's like math or English now to have as a background in your curriculum.
So when I take it for at least for a little while, you're out of the trying to make acquisitions. When you're looking at acquisition targets, all of you, and you're thinking about acquiring companies that are overseas, does this political environment sort of impact that thinking?
Well, I'll just give you one anecdote. I'm actually on the board of NXP Semi. And publicly, as you all know, Qualcomm is in the process of buying the company. And, it was an advantage for them because they have a lot of cash actually overseas. And I think, and so, that's an incentive for companies to utilize their cash, but I don't think that's good for the U.S. Honestly, I think so. I think, we can get into it, but I think the idea of leveling tax rates, and I can talk a little bit more about that later, but also repatriating cash, I think will create the incentive, the carrot, if you will, for doing acquisitions in the U.S. again, as opposed to all this cash trapped overseas and being utilized to acquire companies overseas. So, yeah, I think a lot what's going on today will help. And, again, if you look at NXP, which I've been on the board now for 6 years, I think it's going on 7, the company really was created from acquisitions. I mean, we acquired companies like Freescale, which basically doubled the size of the company, and now the company's getting acquired by Qualcomm. So if you look at the semiconductor industry, which is where I really started my career, the consolidation going on in that industry is mind-numbing in terms of the so fewer companies today that exist in terms of consolidation has gone on. And I see a lot of that consolidation going on. The yang of that versus the yang is there's some industries, particularly you've seen in healthcare, where there's been so much consolidation where the government has actually stepped in.
I mean, I think it really, for us, I'm focused primarily on North America, but in the last 4 months, we acquired 2 businesses, one really for Home Advisor, one in Germany, which is sort of the equivalent marketplace overseas there, and then one in Canada, which I guess doesn't really, they're close by. But I think it really depends on the part of the world. So, especially your comment about Trump earlier, depending on what's happening right now in certain parts of the world, we're just going to wait and see what happens. But what we did with Match over 5 years is we acquired over 20 businesses for $1 billion in aggregate. We're kind of doing that right now with Home Advisor, where we're finding parts of the world where we can be the dominant marketplace. So we're definitely looking overseas, but I think in certain parts of the world, we are being very cautious because we're not really sure what's going to happen.
You've curtailed your activity in Sweden, for instance.
No, I'd really say
the
more in
environment.
Asia. And when you think about the acquisitions coming the other direction, which you may ask questions about. But so we're definitely looking overseas, but a lot of it is colored by, what is the Trump administration going to do and what's going to get through Congress. So.
I think I probably echo similar views, but maybe a different angle. See, particularly the space that I come from the enterprise software, right, enterprise sector. In the enterprise right now for the last 4 or 5 years, it's been going on until accelerate even more. People want to buy only business in the US, right? I don't even want to have my employees outside, right? There's something called a network effect. So today, if you go talk to Google, the Amazon, ServiceNow, we want people to close by. It's 1 + 1 will be like 11 than 2. So gone are the days where you want to hire people from China, India, etc. I think that's is a panacea right now. Nobody's interested in that. It won't get, as a general manager, senior VP, it doesn't get my appetite because I want to co-locate people right now. With particularly in the areas of cloud, SaaS, machine learning, I mean, trying to do innovation with people sitting like 10,000 miles away is not going to work. So I think most large enterprise, they'll pay higher multiples for business in the US, and particularly in Silicon Valley. They don't even want people in Austin. They don't even want people in Long Island or in New York or Boston. So when it comes to software right now, it's all in Silicon Valley and maybe Los Angeles, but that's it. I mean, if you're not in Bay Area, I mean, for me, immediately you lose my interest. So that's the way in which people are looking at it. Because I want people to be close. Like I have teams in Seattle, San Diego, LA. I mean, that kind of gets more interest in the West Coast, little parts of East Coast. But outside of US, yeah, it's going to be a tough game.
That's interesting because a lot of companies I'm looking at right now, they might be based in the Bay Area, but they're increasingly hiring teams in the Philippines, Southeast Asia, just because of the cost and churn of hiring engineers in Silicon Valley. It's very hard, especially if you're a company that is really trying to be very capital efficient. So it's going to be interesting. The administration's talked a lot about bringing jobs back here for manufacturing. A lot of companies now, obviously have teams overseas. And I'm curious to see what his stance is on that.
And I think those guys will be the losers. So I think anybody hiring outside will be, because right now I think with the language of machine learning and AI, I mean, my job is getting eliminated, right? I mean, if you look at the press releases, 20% of press releases are written by algorithms. Look at cybersecurity, and anybody who followed cybersecurity in the last like 4 or 5 years, thousands of jobs are lost in every SOC automation, right? Yet there are a million jobs to be filled, right? Are you going to fight with Russia and Syria when they're attacking our banks and our institutions? How are we going to do it, right? It's all driven by algorithms today. I mean, talk to Goldman Sachs CEO or Capital One CEO. The trading is automated. We have a driverless car which is automated. So the business, so the lawyers' jobs will be eliminated. The press releases will get eliminated. The CFOs will be automated. Like 80% of what this has to be automated, right? Even the software. Last year, if you look at what Go has done, Google has done with a game called Go. And if you guys followed on, the software wrote itself a software. It's like the Skynet, right? So far, human beings are writing software. First time in like 40 years of computing industry, where an algorithm while playing a game wrote itself, right? If you hear that, like the Turing Award guy, the Turing will come out of the grave right now, right? I mean, seriously, I mean, it's software at its nirvana right now. Software is writing itself. So why do I need a software developers, right? When she's saying that people are being hired outside, those are the companies trying to cut their costs, trying to survive. I call them fixer-up companies, bottom feeders. They're going to get eliminated.
So I guess the question is whether that leads to a good future or a bad future.
Hopefully, good movie than Skynet, right? So look, I'm a product guy. I'm totally bullish right now. I call them animal spirits are out, right? With all the what's going on with all the machine learning and with new administration. I mean, it's like no regulation. I mean, it's going to be all in software right now.
So back on the cross-border theme, I spent a lot of my time working on cross-border M&A transactions, and it seems like there's been this continuing trend towards cross-border work over the last 10 years. And I get the sense that there's been a little bit of a sea change, at least in attitudes, about some cautiousness about acquiring companies outside the U.S. right now. There's certainly more of a U.S. first mentality. I think it's been pounded into everyone's head.
Buy American, hire American.
Yep, right, exactly. And we're seeing more and more of that. And then some, perhaps thinking that there's some hostility in other countries, perhaps towards us, given the way that we're conducting ourselves currently. Are you seeing any of that? I mean, I understand you don't want to go outside of the Bay Area, but thank you for coming to Los Angeles, by the way.
Once in a while, I'll come here. No, I think I do see a change in one area, which is I mean, the reason to buy American and build American is the theme that's been there. It gets propagated not because of the administrative change. The way in which I see that, as I talked to you earlier, is because of the automation going on, right? I mean, look at every industry. The jobs are eliminated because things are being automated. But does not mean those people don't get jobs. Like it's like industrial revolution. There'll be new jobs to do, right? In 1950s, if there is no AT&T invented the switch, what will happen? Everybody will be doing manual switching. It didn't happen. But people did not lose a job. So I think people are worrying about a change that's going to happen with machine learning and AI. But there'll be other jobs will come. I mean, I'm very optimistic that people are going to find new jobs, but they have to train themselves, move up the ladder. The things that you do manually, like filling a form or writing some things, those things should be eliminated. It's a repetitive task. A human being shouldn't be doing it. You don't need a warm body. You need a warm robot to do it.
And certainly there's a lot of people that think that, that technology accounts for much more of the job loss than, losing jobs to manufacturing jobs to Mexico. Do you, well, you made an interesting comment before that because of the new immigration rules, that it's harder to acquire talent, or harder to find talent, to attract them individually, so that might also drive.
I mean, absolutely. Look, I think with the new one, there's a H-1B cap that's coming out, or H-1B new rules changing on April 1st with the new administration, right? That you can't even transfer people with H-1B visa. Even though you work for XYZ company, you are legal immigrant, you still cannot move from between the jobs. It'll take like 6 months or a year. So if you have a project, and in this age, everything in technology, 12 to 18 months is a lot. Like 2 years from now, when we sit at Montgomery Summit, that we'll be talking about totally different technology, right? 2 years changes so much to the point, if you can't hire people from other divisions because of H1 limits, then what are you going to do? You have to buy companies. So M&A will go skyrocket right now. The only way you can acquire people is not organically transferring people. You're going to just buy people by groups.
Any thoughts about that?
No, I think I would say much of what we see going on today is business friendly, but I think the immigration, I totally agree with that, that is not helpful. And hopefully that will get watered down over time or change and so forth, because the technology, you just look at the technology industry, it is so developed with both U.S. and immigrants that it is no question we need to go back to some of the old policies or even make them more expansive. And I'm hopeful. I tend to be more of an optimist than some, but I'm hopeful that gets all figured out over time. But I think the business friendliness of the current administration will be helpful to all the things we've been talking about on the panel here, particularly on the tax side of the equation, particularly on the regulatory side of the equation, and just the idea of having more, carrots and sticks in terms of the environment. And there's different ways. I'll just give an example. In inversions, is one way is to have a stick to keep them from happening. Another way is to have lower taxes to have people stay here. And it's just a lot easier to create a carrot and do that here. And it's amazing to me the prior administration couldn't quite figure that out.
So to what extent, and perhaps this is an obvious, this answers itself, but to what extent do taxes drive M&A activity?
Well, I'll give you it's funny, I always go back to a saying, like, how much does the R&D tax credit drive R&D? And I would tell you almost zero. And so I don't know that taxes really affect. I think the attitude of the economy, of the administration, I think that having a stable stock market, not necessarily up or down, but having it stable is very, very important. But I don't necessarily think taxes, attract it. So I am a big fan, honestly, and I can go through it, some of the stuff I've heard lately about taxes. But I'm a big fan of normalizing taxes, making them much more normal across the world, and eliminating a lot of the deductions and changes and adjustments that get done that frankly don't really incent people to do things you think it incents people to do. And to me, R&D tax credit, which my industry loves, but I have never found a company that basically changes how much R&D they do because of the R&D tax credit.
I mean, I look for good companies, great founders, great teams. Certainly tax, I think how does it affect us? If there's the ability to bring tax back and cash back into the country, I think that will help us be more acquisitive here. We've got some cash overseas and we have businesses over there. But I think the quantum of cash we've got there, we'd like to bring back. In some of the tax regulations that have changed, I think on stock-based comp is sort of interesting in terms of how that's accounted for. That's not really necessarily an M&A question. But I think I agree with you. I don't think I've ever looked at tax as a driver to do something or not do something, because we're owning businesses and we're trying to help them, make them successful.
I do agree with both of them, but one slight change that I would comment there is, at least in the technology space, the reason for M&A lately, or it's been in the past and will be more, is the guys who are going to be disrupted, they're willing to pay any price right now, right? Their businesses are so much disrupted right now. Like if you're competing with Amazon, if you want to compete there, they'll pay any price. Take Walmart, right? I mean, so look at all the companies that are going on. So, or take companies that are fighting with Google, or all these companies are Microsoft. I think the guys who are going to be disrupted or disruptor, that's the game going to be. So the main M&A driver right now is my business healthy? Am I growing? If I'm not, I'll pay any top dollars to grow. That's what people are looking at. Taxes will be it may be in the bottom ladder, or any other things. And obviously, whenever I want to acquire, I'm looking for good founders, good teams. But it's the revenue, the business growth. Can I even survive? So survivability and the growth are the reason people are buying.
So you've all referenced the notion of bringing cash back from overseas, and there's sort of a wide range of estimates as to the amount of cash that's trapped overseas, ranging from 1.5 to $2.5 trillion, but it's a lot of cash. We have that cash, if it were to come back right now, a corporation would have to pay 35% tax, less whatever tax they paid in the foreign jurisdiction. And Donald Trump, during the campaign, made a lot of noise about wanting to adopt a tax holiday that would essentially give a period of time in which corporations could bring tax back at a 10% rate. With the idea being that companies like Apple that have hundreds of millions of dollars overseas, hundreds of billions of dollars overseas could bring that money back. When this was done, this is not a novel idea. It was actually done in the Bush administration in 2004, and in 2005 and 6, it resulted in $300 billion coming back to the U.S. But most of that money was used for stock buybacks and dividends. And I guess there's some rumblings now about possibly putting limitations if the money does come back and not allowing it to be used, or trying to disincentivize the use of that money for buybacks, which if it was disincentivized for that purpose, then it would need to be used for something else, and perhaps that keeps all of us busy doing M&A deals. But what are your thoughts about that? It sounds like you've spent a lot of time thinking about these types of issues.
You know, I think that it's hard to put limits because, frankly, I come back. Cash is fungible. So how do you sort of say this cash goes for this use versus the cash I already have on my balance sheet goes for that use? I don't know how you really do it. I think it's very simple. You bring cash back. If it goes back in dividends, guess what? That goes into pensions, endowments, whatever. It gets recirculated. You do buy stock buybacks, guess what? It gets recirculated. If you buy companies, fine, it adds to that. If you invest in your business, it's all good. It's better than having it sit and doing nothing overseas. So I think these arguments, you know, and frankly, in past administrations about these arguments, worrying about where the cash is going to go use, I think is just a crazy argument. I think having cash and keeping it from being trapped and allowing it to be, even if it's recirculated back into the economy, that's all good. That's, you know, it goes back in theory and economics. It goes back to people that will use the cash, whether it's, you know, individuals, whether it's endowments, whatever. That cash goes back and they can reinvest it. Goes into endowments. Guess what? They can go reinvest it, and they can if it goes back in buybacks. Whoever gets, so you have less stock, so it gets reinvested. It's all good. I don't. People make these crazy arguments about why it has to go capital investment or hiring people. You can't really follow the cash. I mean, I think it's always been crazy to me anyway, and it makes in my opinion, makes no economic sense.
I have a different view on that. So again, I'm going to give you the entrepreneur view from the Silicon Valley. I think any
I'm Silicon Valley too, by the way.
Good. Maybe I'm an entrepreneur.
I am more Silicon Valley.
You're the CFO view.
I am in the Silicon Valley. You're not even in Silicon Valley.
Okay. So the view of the entrepreneur view again back
This
to
is
Silicon.
not Silicon Valley down here. Just to be very clear.
Okay. We'll call
If we
extended
do it,
Silicon
Emily,
Valley.
we might need you to change seats.
I mean, I'm in New York. And I'm from Texas.
So back to the entrepreneur view of the Silicon Valley again, Ken, is that if you bring the money back, you want to use it to employ people. I don't want to go to dividends. I don't want to pay to buy back. I'm not here to make some hedge funds happy. So what the value wants to do is back to the jobs. If you want to do hire people and grow people, that's what administration wants. If you want to give the tax holiday, use it to hire people. I don't want to sit there and keep cutting people and use that to give it a hedge fund. If I'm a technology company, you know what? Buy companies, hire more people. So for every $1 billion you bring back, hire 1,000 more people. You can put in, even though cash is fungible, you can put limits on it. If you brought back $10 billion, hire 10,000 people. Right? So there are limitations to be done. It's a very easy math problem to solve.
It's not that easy. I would disagree with you. I would totally disagree with you.
Right, so that's one point.
And companies are doing crazy things where they borrow in the U.S. so they can pay dividends when they have cash overseas. It's crazy.
So again, good to disagree, right? We agree to disagree. That's one point. The second thing is more than the money brought back. I think where the biggest bang for buck will happen is by cutting the taxes, M&A will go up, right? Cutting down the capital gains, taxes, that's what the value wants.
Taxes generally, and
taxes in general, right?
Not just a holiday.
That will drive entrepreneurs to sell at a lower price or higher price, buyers to buy it. So I think there's a lot more interest to reduce the capital gains or taxes in general. That will drive a lot more M&A and a lot more activity in the business. And any money that's brought back, I mean, try something to some form of hiring. I don't want the free money to be back, and I'm not here to make hedge funds happy, at least where I am.
Any thoughts about taxes?
I think I agree with what you said about just bringing cash back and trying to follow the dollars. You can't do it. Again, I can only speak for ourselves. We'd rather use cash than our stock right now. So I think that, and we bring it back and de-lever, but the same implication of that, what's that? It just frees up capital for us to go acquire companies or make investments. So
Yeah, I'd say I have had some discussions with some folks in the administration, rather not give their names, but it's clear to me they want to get something done by August. It's clear that with a border tax, the rate goes closer to 20. Without a border tax, to make the numbers work, is probably closer to 26, 28. So I think there's no question they want to do it. And I think it's hard to implement, but I think the concept of creating a level playing field is what's really driving a lot of the discussion of border tax, and whether that's the best way of tariffs, whatever, I don't really know. But there is some logic to a border tax just because of the perceived unfairness across the world in terms of how we tax versus other countries tax. I mean, they went through it like we're literally the only country that does a tax the way we do versus everywhere else in the world. So I think there will be reduction in the clearly the types of deductions that are allowed. I think on the personal side, we'll go to 3 tax rates versus the number we have today. There's a lot of discussion to keep the mortgage deduction as well as a charitable deduction. The other thing is there's a lot of discussion about one of the things came up on interest deduction, that it will get phased out, but it'll be a grandfather for existing interests now for companies. So leveraged companies that already use a lot of interest will get a grandfather for the interest they already have, but it'll get changed for a future interest and so forth.
And one of the other points relating to personal taxes that a friend of mine in the audience mentioned last night is that there's a proposal to, while reducing the highest tax rate from 39.6 to 36.
I heard 35, but okay.
But at the same time, eliminate the deductibility of the income tax you paid at state level. So for
Yes.
People in California, the
I think that's
result
true.
is,
I think that's
is
true.
neutral.
Well,
Which is maybe a way for Trump to stick it to the blue states.
I think that is true. You're right. I was actually going through the numbers myself. If you take the number from 39.6 to 35 and you don't have the deduction for the state, I think that is basically neutral for California. But I think it also, how do I say this? I think for all the folks in California that we've gotten a free ride relative to the deduction, I think it'll make it very visible how high our taxes are in this state, which is probably good for all those people that love what we're doing today, if I can say it that way.
I imagine the impact will be the same in New York.
Oh, yeah.
So
It might put some pressure on states finally to think about taxes. Finally.
So as we think about M&A trends going forward, I know that you have Muddu, you have a very strong view that AI will certainly continue to be a huge focus for you.
And cloud and SaaS.
And cloud and SaaS, and obviously that's exactly what your company is focused on. Emily, what do you think, what are the areas of great interest to an IAC and to other similarly situated companies?
Sure. I mean, we've always, and I continue to look at marketplace businesses and looking at, I don't know if all the jobs are going to get lost, but we look at trends where there's an offline to online transition. And I guess one of the things I've seen as we've talked to a bunch of companies broadly defined that are running marketplaces is what's a true marketplace that's software enabled versus a thin layer of software that's just helping you transact. So, I've seen more and more companies leverage technology to create marketplaces, supply and demand. That's really what we're looking at right now, and just continue to. And that's across various verticals, very large marketplaces, and companies that can get the unit economics right. So.
And as between those two, the company that is much greater significant portion technology, creating an online marketplace.
Oh yeah,
or
I
just
mean
a
your
thin
margin.
layer.
It's all about your margins, and so. I mean, I think sadly, to your point, these are companies that are disrupting markets and causing job loss, although some of them are actually facilitating folks finding jobs, some of the marketplaces for freelancers, some of the marketplaces for hourly workers that are out there. So.
And as well as lower costs dramatically for consumers and businesses.
Yeah, so it's, I think those particular marketplaces can provide both benefits but also disruption.
I think from more than the AI, ML, cloud, other areas that we see coming up in the future will be industrial IoT. IoT as a technology is going to become popular in the next 10, 15 years. Cybersecurity is already hot. It's going to get even more hotter. Security will not be just an IT problem. It's a boardroom problem. And the boards are right now, if you look at how cybersecurity and the CISOs are not, CISOs, who is the Chief Information Security Officer, will not report to CIOs anymore. They don't even want him to report to the CEO. The board wants to manage. It's a reputation of the company, right? Go to the audit committees. So things are going to change a lot in the board dynamics of how the cybersecurity is going to play a role. So security, IoT, cloud, SaaS. I mean, they're all happening at the same time, which never happened in the past. So it's a massive change.
And just SaaS, I think that's, I mean, you can talk about VR, that just every business that I'm looking at has
SaaS business,
is a SaaS business,
Yep.
or is a take rate on a transaction.
Muddu, you had an interesting point when we were talking earlier about you think that all these small SaaS providers are in real jeopardy given the consolidation that has gone on by some really big players.
Right. I think it's like the analogy that I give is like aircraft carriers. You're not going to have 1,000 aircraft carriers. So what will happen is there'll be 3 or 4 large SaaS companies that are going to survive. It'll be the Amazons, the Googles, the ServiceNow. Right? You can see that what will happen is all the other guys will become that boats will join these aircraft carriers, right? If I'm a customer, I'm not going to buy 1,000 aircraft carriers and trying to run my business out of those. So I think these platform companies, whoever has this platform to survive for the next long haul, are going to stay. Everybody else will be either sell themselves as a tools, people, process, going to get, they're going to be re-platformized into these companies. So that has to happen. Otherwise, I mean, imagine yourself, if you are a CIO or a CEO, you're going to buy from all of them and trying to stitch them again together. It's not going to happen. Knowing that they're all SaaS companies run differently, so I think you're going to go to very fewer companies. I think 10 years from now, I would think 90% of the companies that are presenting in Montgomery Summit will be gone. There'll be like fresh 90 companies.
I mean, I do think what's interesting in that way, if you look at Trello being acquired by Atlassian or RelateIQ being acquired by Salesforce, you have a lot of companies that have built tremendous businesses that are very scalable, and they start with a freemium layer, SMBs, and they move up to enterprises. And so I do think that consolidation is going to continue. But then you have companies like HubSpot that have gone public that are becoming large businesses in and of themselves, or there's certain vertical markets. I mean, I always think about OpenTable. I don't see restaurants kicking out OpenTable anytime soon. For Amazon, a lot of people have tried. It's just the way that industry works, and how hard it is to run a restaurant. How much focus are you going to put on ripping out your existing CRM and putting a new one in? You just don't have time, and you may not have the money or manpower.
Can you have been in this industry broadly defined for a long time and have had a seat at the table in Silicon Valley since the 70s, right? In big companies. Do you think there's more consolidation now generally in the industries, or does it feel kind of like it always has, where it's just a constant cycle of?
I think it's actually both. I've often felt that the pendulum swings back and forth. I think in some industries there is more. I mean, I grew up in the semiconductor industry, and clearly that's a mature industry, and there's a lot of consolidation going on. I think if you look at software and SaaS and security, just go to the RSA conference and you literally see hundreds of companies participating. They all can't exist. There's a company, excuse me, company I work for, I remember we used to say, get big fast. That was our motto, because if you don't get big fast, you can easily you become a run-of-the-mill company. And so I think, but that's been the case in technology for a long time, if not forever, in which you have an entrepreneurial spirit. You have a lot of companies get created. Certainly, there are a lot of companies getting created today. Many of them will do okay. Some of them will go away. Some will get consolidated, and that's the natural evolution. But you can look at 3, 4, maybe even 10 major technology trends going on today, probably more than ever. And as those trends drive new company and new company formation, as they get to a good size, they go public, whatever. And if not, they get acquired. I think the one thing that will be very helpful, I think, is a positive economic environment in IPO market. So companies will look at that as an available exit strategy, where it really hasn't been an exit strategy for the last couple of years, effectively. And so I think there's been so much money in the private world that companies did not go public, or they frankly looked at getting acquired. But I think having a good IPO market, I mean, there's a stat I saw the other day where over 20 years we've gone down from something like 7,000 public companies to 4,000. It's crazy. And so to have, and I was also at NASDAQ event last night with the CEO, and so to get a much more, accommodating, if you will, public market, I think is will be very, very healthy, and we really haven't had that for a few years. So, but I've seen the pendulum swing back and forth, and, I don't think, necessarily we're in a more consolidating environment today than we were years ago, other than the fact that I think there's been a dearth of IPOs, there's been a dearth of the someone use animal spirits to go public as opposed to staying private or frankly getting acquired. And so I'd like to see a stronger IPO market, and so we create a lot more independent companies.
And so maybe that will happen. Maybe that'll be one of the byproducts of having a more deregulatory environment. Maybe they'll ease that process.
I think both the talk of deregulation and getting deregulation will help. I mean, again, I tend to, as you can probably tell from this panel, I tend to be contrarian in a lot of things. But, I think we did the Sarbanes-Oxley. Actually, interestingly enough, a lot of those regulations I think were quite good. They were very thoughtful, quite good. Some other regulations aren't so helpful and thoughtful. So I think, but I think just the general, not bashing business, which is what we've had for a number of years, is just not healthy for our economy. And to have a much more positive spirit out there about business. I mean, business employs about 80% of the people that have jobs. Business employs about 80%. If you're not in healthcare, you're not in education, you're not in government, that's where you get a job. And so to be bashed, I never could quite figure out why you want to bash the part of the economy that employs 80% of it. I just never could quite figure it out, but it's been what we've been doing now for a number of years.
I mean, I think the consolidation that's happened out here in media and in telecommunications is really staggering. So what companies are left kind of from the prior generation as consumer behaviors shift to viewing content online, and also just given the consolidation of digital ad dollars around the very large platforms, Facebook, and obviously Snapchat now. So I see that continuing, but it's just interesting. I was talking with someone yesterday, and I said, all right, well, think about the number of studios out here 10 years ago and what's left today. And then you see foreign investors coming in and making acquisitions of some of the remaining content libraries. So I see that continuing if those trends continue, because having scale really matters. But a lot of, not a lot, but a significant amount of that's happened over the last few years, so, at least in those sectors.
And you're absolutely right. At the same time, you see a lot of new entrants that didn't exist 10 years ago, like Netflix and Hulu, and the emergence of HBO and Showtime as kind of standalone channels that people.
But even that, you have a lot of these SVOD channels launching. But even that, Netflix, Hulu, Amazon, maybe whatever Apple's going to be doing, YouTube now, they're becoming the new distribution outlet. So.
Yeah, absolutely.
Yeah, so one comment to what on that front is on the consolidation is, I think if you look at the ad companies, right? So all the ad companies got fully consolidated. That industry, e-commerce is going through a consolidation. Telcos went through a consolidation. And I think definitely, as Ken saw, the whole semiconductor industry, whether from the EDA companies to chip companies to fabless, they all got consolidated. Software is going through that. I think why people are talking so much about this consolidation is that same playbook is happening in the software industry, which hasn't happened in about 30, 40 years. So enterprise software that we know in last 34 will be gone. I mean, whether it's going to SaaS or cloud, that's not the technology I'm talking about. The regular companies that you know about enterprise software won't exist. People are not buying software as it is, as a shrink wrap software. I buy it, I deploy it, I buy a hardware. It's all gone. I mean, so people just want to consume everything as a service. Every software as a service, or a piece of problem I want to solve as a service. So I think that change people are not talking about. So what does it mean is the enterprise software companies will go into these large platform companies as a SaaS companies or a cloud, and people are going to consume everything like an Uber model. So it's the business model is going to change, the subscription model is going to change. So it's a lot of deeper than what people are thinking in terms of M&A.
In many respects, software has just become an established industry that, like a lot of established industries, moves towards consolidation.
Yes.
And I think all of the disruption and where you see the innovation is happening now in other areas like cybersecurity, and so you don't yet have the consolidation there that you have in other places. We'll take a few minutes to see if there are questions that the audience has. So any questions?
A question about specifically, what type of multiples are you seeing
Oh,
compared to a couple of years ago? And what do you expect that trend
yeah.
to do going forward?
So that's a great question because we haven't talked about valuations. So if you look at where our stock is trading, so Match is obviously public. If you pull out the value of Match, we're trading very inexpensively. We're trading at about, I think, 12 times EBITDA. So companies I'm looking at, obviously we want to find growth. And if you're a SaaS business and you're growing over 60% a year, you're going to want 10x. And there's a big disconnect between the valuations in the public and private market, so I think about that a lot. So want to buy growth, and these are great companies, and it just becomes challenging because you look at the businesses and you say, okay, well, when are you going to start generating cash flow? Because we're going to own these businesses. It's not that I'm trying to optimize necessarily for a multiple, but it is tough for us right now to find some of the larger deals, or at least it's, I've got to have real confidence. And as I said earlier, the markets are really priced to perfection right now. They've priced in a lot of these things we've talked about. And sometimes I wonder whether people are kind of good at going and raising money right now because they can, money's available, and there is a lot of uncertainty about the future. So it's challenging right now. So I've had a lot of conversations. We will be making some smaller acquisitions, but in terms of like a real substantive deal, I think it's tough right now. Because great companies can get money from a lot of places. So, unless it's a strategic value, whether it's for Vimeo or HomeAdvisor or something, where we can really see that we can come in and apply. I think what we know best how to do is customer acquisition. So if we can see that we can apply some marketing to that and improve it, then we might be able to pay kind of a higher multiple in certain situations.
Any thoughts about valuation? I know you've spent.
No comment.
Ken?
No, I'd say I think that was right. I think certainly in the private market, I see tremendous valuations for growth and acceptance of losses. And I have to say I'm a bit of an old school where I do like to see a profit model come to fore. And when I go on boards, I tend to be one of the voices to get to profitability as fast as we can. Whereas the private market just puts such a high valuation on growth, which is good, but I've seen models where you keep on growing, but you never get to the profit. So I think that's, I think the public market, I think versus today versus the crazy late 90s, which I participated in, I think the public market has generally stayed relatively sane, and the private market, if I could say, got a little insane. I think Bill Gurley's probably been the most provocative in terms of talking about private valuations there. But so I think you have to be careful in some of you're paying up for the high growth, and you see it without naming any companies, you see it where you go public and after a quarter or two your growth all of a sudden levels off a little bit and your stock frankly almost tanks. So I think you can be you have to be very thoughtful as to how much you pay up for growth, because it's hard to keep on growing at some of the rates people expect.
That being said, I look at unit economics. So if a company has really figured that out, and sometimes I look at things like, well, how much money has the company spent relative to $1? So if it's they're generating over 50 cents or $1 per dollar invested, even if they're early stage, then something's going right. Their unit economics are right. And so you can miss a lot of things too if you if you're seeing something happening. But most of the time what I'm seeing where people are simply looking at their year-over-year revenue growth, comparing it to other companies and trying to, even if it's in a totally different sector. So.
I want to add one more thing on that just very quickly. I think one of the dilemmas in private companies is how much do you pay for how much do you a portion of your revenue to sales to bring on new users? And again, I'm not going to go, that's a debate, but that's a clear debate going on right now, is how much do you would invest in sales to bring on new users?
So I think that the main plenary session is about to start, so we'll conclude our panel. I really want to thank Ken, Muddu, and Emily. Fantastic panel. Thank you very much. Thank you all.
Nice to meet you.